Good afternoon, Rockheads. This is Lorenzo Marquez. Thank you for joining the June 2020 call. It's certainly been a couple of interesting weeks over the last few months, and we're thankful that you're giving us an hour of your time to be here with us today. We have a great program presentation for you. This and every Rockhead meeting and call is under the antitrust statement. And if anybody has any questions or has any concerns about this, please let us know or look for that information on the website. Today we're going to be talking about responding to a recession, and we have a great speaker that's joining us from Marcum LLP. Before we get into it, we'd like to give a heartfelt welcome to the camera-less men, Josh from American Financial, who everybody knows and loves.
No, thanks for having me, guys, and as always, thanks to all the Rockheads. It's good to always be on these calls, and I've never actually had a chance to talk, so I appreciate it. I'll be brief, but it's always good. I wish I was seeing you all in person these days like we normally do, but you know, under the current circumstances, I'll take this. So what I put in our I had John and the team put in our slide here was basically just an overview of what we do. And I know a lot of the Rockhead members have actually worked with us in the past as far as equipment financing. Many of you have not. Many of you may not need to, and that's perfectly fine. But we love to help whenever there is someone out there who needs help with capital equipment financing. That could be anything from I used to use laser products as the kind of the low end, the laser templator, but now we even most recently we've been doing a lot with no lift, the no lift carts. So I mean anywhere from $7,000 all the way up to your larger CNC robotic saw cutting equipment, which can be up to $500,000. So what we do is very different, and that's I'm not going to go through word for word on this slide, but what we do is very different than traditional bank financing, and also very different than you expending your cash, especially in times like this. We've been getting a lot of calls to refinance equipment or to get cash back out of equipment that was paid for last year or the year before. So unfortunately we can't do that, but what we can do is going forward we can help, especially during times where pricing from a financing perspective is extremely low. What we suggest is you use financing now and not pay cash now, so you don't get in a situation of whoever knows what's going to happen going forward, that you don't need to get cash back from capital equipment you could have financed. So on this slide, the biggest differences between what we do and more of traditional bank financing is going to be no down payments, no required down payments. We're not going to take a blanket lien on all of your assets. We're not going to encumber everything that you have, including your house sometimes from a bank perspective. So we've been doing a lot of deferred payments where customers want to right now acquire equipment and not have to pay for it for a few months. Up to 12 months right now is kind of what we're doing for deferrals. So those are some of the biggest things. Again, I'm not going to read through all of this stuff. Many of you already know how to get a hold of me. My contact info, my cell number is right on there. My email address is on there. What I'm going to do after this is I'm going to send to all of the Rockhead members a copy of this. It's a PDF, and you can type in an equipment cost and get an estimated payment on a 60-month term. Now we're not limited to a 60-month term, and in fact, many of the customers that might even be on this call right now actually will go out to 84 months. So what I would suggest is anyone that has questions on financing, anyone who would like to discuss the benefits and the differences between this and maybe using your bank for financing, or the risks of using cash to make your capital equipment purchase, I would just say give me a call, shoot me an email. I'm happy to talk offline and we can go through this. And I know at I think it was Nashville last year, the year before, I think I had Vince from Rumford Stone step up and say a few words. There are many Rockhead members that we've worked with as far as financing, some very small equipment, some larger equipment like Baca systems. RoboSawjet. So all of those things, again, going back to a no lift, all the way up to a very large purchase. We can help with anything for as far as financing goes.
Josh, at what point of the conversation or the negotiation with the equipment manufacturers should you come in, or should the fabricators contact you?
That's a great question, Lorenzo. I would say that what I usually suggest is get pre-approved. So you can get approved before they actually ever even start to think about or talk with an equipment manufacturer or vendor. So what we do is we're application in stone industry. We're considered manufacturing equipment in our space. So we can do application only up to $500,000, and many of the Rockhead members have qualified for application only up to that price point.
Got it. And are there different terms available through different equipment manufacturers, or they all apply the same way across all?
Well, we have myself and my company. We are affiliated with Baca Systems, who's also a Rockhead member. Laser Products, who's a Rockhead member. So I mean,
Poseidon?
we work very closely with some of the existing vendors of the group. Now we can work with other equipment manufacturers. So that's what we do is we look at the customer's credit, time in business, things like that, and make our decision as far as how much they can qualify for, and then they can go out and actually shop for that equipment.
Got it. All right. Awesome. Well, thanks for the
Josh,
time, Josh.
would you say your
Great
terms
commitment.
are easier? Josh, would you say your terms are easier because you're familiar with the industry versus others that are not? Is that an advantage?
Yeah, thanks for that question, John. That's something I usually try to touch on too. We are specialized in the stone industry. Personally and specifically have worked in this industry for over 11 years now, and the question is perfect because a lot of banks, even though they understand their customer and maybe their business and their financials, they don't understand a lot of this equipment that these customers are buying. So what I suggest is if you want to compare our financing to maybe your bank, a lot of times our financing might be better just because we are specialized in this industry and we understand it.
Gotcha. Well, Josh, I appreciate the Rockheads, appreciate you, and we thank you for your support. And now looking forward to learning about how to navigate these times we're in.
Yeah. Thanks, guys. I appreciate it.
Thank you, Josh. And now we're very happy to welcome David Mustin from Marcum LLP, who is our finance ambassador, and we'll be talking today specifically about how to respond to a recession. David has been involved with Marcum for quite a while and has a lot of experience in the field. So without further ado, David, you probably can speak better about yourself than I can. So everybody, please welcome David.
Lorenzo, thanks for giving me this opportunity. I'd like to thank the Rockheads and John and Lorenzo for providing this time so we can talk about what I consider one of the most important topics right now today. Lorenzo, can you allow me to share my screen? There we go.
Yes, sir.
Hopefully you can see that screen right now.
Not just yet, but soon. Yeah, we can see it.
Okay, great. All right, I'm going to flip through the first couple of pages. So I'm a partner with Marcum. For those of you who are not aware of Marcum, Marcum's a national accounting and advisory firm based out of New York City. We have offices in 30 different locations around the US and offices internationally in Asia and Europe. We are a rapidly growing firm and are really appreciative of the opportunity to work with Rockheads on this topic and a number of other topics going forward. So I am a consultant and I work with clients on really growth opportunities, on transformation, driving cost efficient plans and processes going forward. And I think making sure that we talk about the financial health of companies is vitally important. Over the last 3 months, Mark has spent a lot of time talking to clients about making sure that their employees were healthy, they were practicing sound healthcare practices, trying to make sure money got into businesses' pockets. But I think it's really important to talk about how do we come out of this recession and how do we make sure businesses are positioned for success going forward. So we're going to talk a little bit about recessions. We're going to talk about internal challenges and things that need to be addressed today. We're going to talk about preparing for and addressing best practices for responding to recession. What are the benefits really of planning and preparing for working through a recession as we go forward? So just a quick status on where the market's at today. As most people know, the market's been in an extremely strong state for the last 11 years. There was a recession in 2007 and 2009 where we saw a 54% drop in the stock market in 17 months. And that is an incredibly deep drop in a very short period of time. Now, over the last 11 years, we've actually had a very strong, consistent recovery where on February 12th of this year, we hit an all-time high of the stock market where the Dow Jones hit 29,551, which is an incredible run. We've never had as solid and as strong a run as we have over the last 11 years. Now, we've experienced a number of challenges since that time. We're going to talk about that in a little bit more detail in a few minutes. But I want to touch on a key point around what happened in 2008. Now, I assume everyone was in some business at that point, and it was the worst recession that our country had since the Great Depression, 1929. And Ben Bernanke said it was possibly the worst financial depression, including the Great Depression. Now, across the bottom is a quote by a gentleman by the name of Jerry Schaefer, who was in the Federal Reserve. And what he said is that the shocks of 2008 were bigger than those in 1929, but the outcome wasn't as bad because the federal government took a policy response that allowed us to recover faster and better. And so the point around this slide is how we respond to a financial crisis is very important. And what I want to give you by the end of this presentation is a number of techniques and tactics that we think you should engage in yourself to lessen the impact on your business, to make sure you have customers coming back to you, make sure you have the right staff in the right place. And by a proper response, you can improve your ability to respond to this recession and come out in a much better position than you might have otherwise. So that is what we're going to be talking about. So a little bit more on the state of the economy. If you look what's happened over the last 3 or 4 years, what we actually see is the economy has been in incredibly good shape. So if you look at corporate earnings from about 2017 to early 2020, what you see is that corporate earnings and corporate profits are way up. It's been pretty much a continuous upturn for the last 3 or 4 years until you hit the first quarter of 2020. But if you look at the number, I know these numbers are a little bit small, but in that first quarter of 2020, we still show corporations posting a $1.6 trillion earnings for the first quarter of 2020. What that tells me is that corporations, for the most part, are in a very healthy shape and the reserves are deep. And these are obviously publicly reporting companies. For the most part, they're in healthy shape. We also see on the right-hand side of the slide is that the tax rates dropped significantly in 2017 to 18 as the Tax Act was passed, dropping the corporate tax rate from 35% to 21%. So not only does it mean that earnings are up, but we mean that the company's ability to retain that and pass that along to their shareholders is much higher as well. Now, when we talk about a recession, I'd like to be clear about what a recession versus a depression is. And I found this quote and I thought it was a little bit amusing. We try to find ways to make things a little bit lighter in these. So a recession is when your neighbor has to tighten his belt. A depression is when you have to tighten your own belt. A panic is when you don't have a belt. And we are not in a depression. We're not in a panic, right? A recession is a drop in business. And what I would say is it's not affecting people uniformly across the board. We certainly expect that some businesses could come out of this recession even better than they went into it. Some will come out roughly the same. And unfortunately, some businesses will be challenged to come out of it. And our objective in Marcum is to make sure that we help our business avoid that third option of not coming out of this at all. We want business to come out as good as they were before or even better. So the National Bureau of Economic Resources is the organization that officially declares a recession. And what they say is a recession is a significant decline in economic activity lasting more than a few months. And what you'll notice is that's pretty vague. There is a lot of factors they look at. And at one point, people talked about being 6 months or more. They realized that you have to, once you're in it for 6 months, people are already feeling the pain. And so they're looking for ways to understand what a recession is before it's too far into it. Now, in the spirit of being current, what I would say is there was an announcement over the weekend by the National Bureau that said we entered a recession in February of this year. So they are officially declared over the weekend that we entered a recession back in February, and that was the peak of the business growth and the expansion.
Although our showroom is temporarily closed to the general public at this time due to the pandemic, we are open and here to be of help. Our main number, 610-266-3121, is available Monday through Friday for customer service or to speak to one of our sales associates to arrange a virtual consultation or appointment for an in-person visit. You may email quotes to quotes@easternsurfaces.com. We plan to resume regular showroom traffic just as soon as it is possible, keeping everyone's health and safety in mind. We appreciate your business and look forward to seeing you soon. Although our showroom is temporarily closed to the general public at this time due to the pandemic, we are open and here to be of help. Our main number, 610-266-3121, is available.
There we go. Thank you. I would ask that anyone who is not muted, if you could mute your phone, that will help with feedback and additional announcements like that. So what I was saying is that the growth and the expansion of the U.S. economy has been going on for 128 months, which is the longest in U.S. history. So there are a number of things that the National Bureau of Economic Research looks at: GDP, retail sales, unemployment, the stock market. I just want to show you a few things of where things have been at. So as far as the GDP for the U.S. goes, what we see is that we have had solid GDP performance between about a little over 1% to about 3.5% pretty solidly for the last 3 years or so. And we have a drop off the table in the first quarter of 2020, where there's actually, while the slide looks like it's 5% down, it's 7% down from the fourth quarter of 2019 to the first quarter of 2020. What we also see is that in the late March through about mid-May timeframe, there were about 33 million people filing for unemployment. Now, what the slide doesn't convey that many of those people are already starting to return to work, and that we actually saw a week or so ago the announcement that the unemployment rate had declined from about 14% to about 13.3%. So what we're seeing is a very, very solid set of economic performance up until first quarter 2020. We see a very, very significant blip in first quarter, and then we're already starting to see some recovery that's starting to happen from that. Now, this slide reflects manufacturing production across the US. So what we see on average for almost the last 100 years is almost a 4% on average year-over-year production improvement in manufacturing production. And we still see that up until about mid-year 2019, manufacturing in the US is occurring very, very solidly. Now, what happened in the third quarter of 2019, as you might remember, is that the China tariffs were applied. And so what we see is that manufacturing dropped because those tariffs were applied, and all the inputs into manufacturing that came from China suddenly caused a slowdown in manufacturing process because of that cost being passed on to US manufacturers that made some of those products prohibitive and increased prices fairly significantly. So manufacturing production did drop a bit before first quarter, but that again is a policy decision, and we can see that one changing somewhat rapidly as well. Retail sales were down, and we know that retail sales were down predominantly because of the slowdown and shutdown orders of many of the states across the U.S. If people can't get into retail stores, they look for the digital online sources, or they literally stop buying. And I would say some of the retail impact came through restaurants and chains where people couldn't get into those. We saw a total failure of many restaurant chains. We also unfortunately see huge impact in retail where there's a number of bankruptcy proceedings starting right at the moment. And unfortunately, I would expect the impact on some of those retail outlets to be fairly significant going forward through the end of the year. And some of those large chains may not make it coming out. We know that Sears was troubled. We know that JCPenney's was troubled. J. Crew was troubled before going into this. And if an organization is troubled going into a recession, it just makes it that much more difficult for them to come out. So one of the things that's really important is for you to get very clear about your own financial position. When you look at your books, it's important to look just not at what your books say right now, but what are your books forecast for the next 3 to 4 months? Do you understand where your revenue and cash flow is going to come from? How are you going to cover your expenses? Right? Now, this is another mixed slide that would say the stock market, the Dow Jones, is down just under 8% since February 12th, that all-time high I mentioned of 29,500. The mixed message in here that is on between February 12th to March 23rd, the stock market Dow Jones dropped 37%. Now, if you remember, I mentioned before in 2008, 2009, the stock market lost 54%, but that was over 17 months. We have lost 37% over 5 weeks. Now, what I would say is we've seen the recovery and it's come back most of the way. And even though in a recession, we see the stock market coming up. What that speaks to is the strength of the underlying financial system in the US. The depth and the positioning of the banks is more robust. The depth of the lending organizations is much deeper. The pockets are much more robust. And overall, save certain pockets like some of the retail outlets, I think the US economy is on much more solid footing than it was 10 or 11 years ago. And the pandemic driving this is a very unique situation that's vastly different than the mortgage bubble that was driving what happened in 2008 and 2009. Now, just one or last two things about recessions. What this says is that over the history of the last 100 years, there's a recession about every 4 years. And it is on a regular cycle. What it says is that we get really excited about our economy and we buy and we spend and things grow. And then we have a retrenchment period of about 4 years. That recession lasts about 9 months. Now, if you remember correctly, we said that the recession that we're in, the expansion that we had been in lasted for 128 months, which was about 2.5 times what the normal time cycle is before we see a recession. So we've been on an extended run, and whether it was a pandemic or something else, it was likely we were going to hit a recession. And so this isn't unexpected. Now, the way it came about is unexpected, but it is literally would expect to see something like this. And the key question that we're left with is this a quick recovery, which they're terming a V recovery, or is this a slow recovery, which is being referred to as a U-shaped recovery? If it's V and it's fast, and we're already starting to see signs that it may come back quickly, we could be in very good shape. But if for some reason we don't have the right policy situations, if businesses don't take the right reactions to come out of this, and it becomes extended, then we could be in for a number of different difficulties. Last week, President Trump signed into law the Paycheck Protection Flexibility Act, which really extended terms around the Paycheck Protection Act to give people much more flexibility in forgiveness, in how they could use the money, in the repayment terms, and that should give people a lot more flexibility to manage that dollars appropriately because of the way each business is different, how they need to use that money. What we don't know is if there's going to be another recurrence of COVID-19 in the fall. And I happen to be based in Cleveland, Ohio. We've already started to hear from some of the healthcare institutions in Northeast Ohio that they do expect a recurrence in the fall, in the late September and early October. As schools come back, as people and things open back up again, but also due to the weather, they're anticipating the potential there could be a recurrence. So what we talk through today is important to remember, not just to do it right now, but to put things in place in case there is a recurrence and things start to slow back down again in the fall. Now, I do want to reinforce that there are recession-proof industries out there, and people need to eat. People drink quite often more. We've seen that alcohol sales have been up. Discount stores have done very, very well in this. Cosmetics, people like to look good, although we were cut off from hair salons and barbershops and things like that. Unfortunately, people passing away doesn't stop just because there's a recession. Energy is one situation where people need to consume energy, and things keep going in processing, and healthcare is where people need to be treated and taken care of. Now, what I would say is businesses that understand their opportunities, even in a recession, are some of those businesses that can capitalize and come out and do much better because they pivot to opportunities that present themselves in the marketplace. And what I would say is there are some businesses that have turned to producing things like masks. They've turned to producing alcohol and hand sanitizer. Now, I don't know necessarily that those are opportunities for stone-based businesses producing countertops and things like that. But it is important to look for where there are opportunities, where there are unmet needs or undermet needs for you in the marketplace, and where you can capitalize on that. And what I would say is, even in this day and time, there are businesses that have been impacted. So we are in a very weird situation. Grocery stores have been impacted because people are not coming in. Healthcare actually has seen a drop because elective surgeries are off, and power consumption is down because people aren't going to offices. Manufacturing has been slowed down. Gas has taken a huge hit. Gasoline has taken a huge hit, and that people aren't consuming it. Actually, about a month or so ago, we saw a situation where future pricing on gasoline was negative. People had to pay buyers $35 a barrel for a barrel of gasoline or petroleum in order to take it off their hands. So it's a very interesting time. So with that said, I'd like to think about what are our challenges to responding to this recession, right? Typically what I find is that the challenges are not even external, they're internal. And are we ready for that? Do we have the pieces inside our own organization to respond? Do we have our management team lined up on what the priorities are? Do we have our financial systems in place for proper reporting, cash flow forecasting? Do we have the proper relationships with our customers to know what their plans are? Do we have our supply chain ready and some diversification on that? And what I see is sometimes we are out on a limb. We didn't put all those proper infrastructure in places, so we're climbing the cliff with our fingertips out there. And unfortunately, when the winds blow hard, as they do in a recession, we lose our grip and our fall. Or when we're out there paddling in the middle of choppy waters, there are sharks and things ready to take a bite out of us as we move forward. So part of this is to get you prepared for these opportunities and eventualities. So I think there's 7 steps that are vitally important to take to prepare for a recession. And I'll take you through those 7 steps, so I'm going to move on from this slide. And the first one is to have a plan. And that is, it is very easy to think that you're going to turn on the switch and all that business is going to come back to you. And I will tell you that I'm in my office for the very first time today in 3 months. And when my company opened our offices up, and my office has been officially open for about 3 to 4 weeks now, we thought everyone was going to come back, and they haven't. I would say we've had about 20% of the people back in the office because we've been able to work very well at home. Well, we can't assume that all those clients are going to come back. I think somebody early on this call said clients and business were coming back slowly, but they are coming back. All the read I have from my partners across my firm says that business is going to come back, but it will come back more slowly than we think. And we can't just turn on and have all the employees come back and work because we load things up with costs. The revenue will not come back at the same pace as the costs will come back. So we need a plan, and those scenarios in the plan need to account for the fact there could be a reemergence of COVID-19 in the fall. Fundamentally, I think businesses are the intersection of a supply chain, of a customer base, and the employees. And all three of those things have to match up in a consistent interlocking method. And if one of them gets ahead of the other, the business gets thrown off and can't respond. And that's what happened early in March, is that when we locked things down, a lot of the businesses shut down because the customers went away. And then we scrambled to respond to the employees, and that threw all sorts of disruption in the supply chain. So your plan has got to take into account is what happens if customers come back more slowly than we think. How do we manage the workforce around that? How do we understand what our supply chain, what if one of our suppliers is not there and goes out of business? How do we diversify our supply chain? And oh, by the way, as much as we may or may not want to admit it, some of our competitors may be more aggressive or less aggressive, or some of our competitors may not make it. We need to understand where there may be new opportunities in the marketplace, there may be new product offerings, and we may need to respond and think more holistically about what this recession means to us. Do not be afraid to explore new opportunities and be prepared. Now, if planning is priority one, cash flow is priority two. And I think we said earlier that retaining liquidity in your business is absolutely vital to making sure that your business can make it through, which is why the federal government instituted the SBA loans and the Paycheck Protection loans, because cash flow is paramount to keeping people in business. You cannot resuscitate businesses that have died from lack of cash. The government moved quickly to put the Paycheck Protection in place. That wasn't the best program I've ever seen managed, but it had to be there. Now, that Paycheck Protection Plan program does not replace sound business decision making. It is a lifeline. It is not leadership for your business. You still have to make the decisions about what that cash flow looks like, how you're going to collect cash, how you're going to bring employees back on, how you're going to stock inventory, how you're going to deploy capital. And the problem is, what I've seen is most of our customers want different terms of slowing down receivables, their payables to us. And what most supply chain wants to do is accelerate the payments to them so they can balance that gap between receivables and payables. And you've got to make some decisions about how to manage that intelligently. Where you can expand lines of credit at low cost rates, we suggest you do that. Even if you don't draw on those lines of credit, if you have a low rate and a great relationship with your lender, just make sure those lines of credit are there. You don't necessarily have to draw upon them, but liquidity as a reserve is vital. And those organizations that don't have access to liquidity are likely not going to last very long.
Dave,
you can draw it. Go ahead.
Sorry to interrupt. Just a second. I believe there's an issue with the chat box. I just want to see if there's anybody that has any questions or would like to make a comment.
I think we got it back up and working. Paul just passed it in there. So if anybody has some questions.
Say that one more time.
We got it back up and working. Paul Manager just typed in who was having a problem initially. So I think we're good. If anybody has questions, you can use the chat box as well.
Sounds good. Go ahead, David.
All right. So the other thing that we think is vitally important is capital. And I talked about ways to manage liquidity, ways to manage investment, ways to manage capital. Managing capital is an important issue. Is wherever you can keep cash in your pocket, think about ways to use your capital intelligently. That's working capital, that's debt, that's assets. Be very careful and very thoughtful about how you do that, right? You want to make sure the issue is managing debt, not just eliminating debt. You just want to make sure you have access to that cash in your pocket wherever possible. Sometimes we think about loading up inventory and having inventory enhanced so you can respond to your clients quickly and efficiently and things like that. Core questions: how do we have a forecast of what your sales are going to look like? And you want to be very clear and very critical in a positive sense about what those sales really look like, and getting a clear forecast of those sales so you don't overload on inventory and you have a lot of things on hand that may not sell right away, because cash on hand is very important, right? Some lenders look at, do you have capital assets in your shop or on hand that you're not using? Can you sell those and lease those back? Or can you take a loan against those to put cash in your pocket? Fundamentally, the message on the last slide and this slide is make sure you have access to cash, either in your accounts, through lines of credit, cash in your pocket, whatever it is, but liquidity is very, very important right now to have access to that moving forward. Now, this seems simple and transparent, but where you're managing a very uncertain situation, what we find is that our clients are also managing a great degree of uncertainty. And where we think we know exactly what our clients are going to do, this pandemic has thrown all of our clients into a tizzy and thrown their clients into a lot of uncertainty. And so there's a lot of bouncing around. And it's very important that you open lines of communication with your clients and have clear communications. B, it's very important to understand that most of your clients, the critical ones, tend to usually be a small minority of clients. What I typically find is that there's that 80-20 rule where 80% of your revenue comes from 20% of your clients. That may not be universally true, but make sure have open conversations with those critical clients and talk to them. Much like Josh talked about, he specializes in this industry, that's his priority. We want to make sure that you are closely attuned and attending those critical clients that drive your business and keep you afloat and keep things moving. And make sure that you understand what their plans are and what their needs are from your business, that you can respond critically. And make sure that when clients come back to you and ask for favorable terms, lowest cost, you make sure you're dealing with those against the right, most highly prioritized clients, and you're treating those so you can retain those and keep those. And there's a lot of difficult decisions, right? We want to keep every single client we can, but make sure you're taking care of your most valuable prioritized clients, that you're doing what's right for you and to keep those people in business. And again, if you have competitors that you think are vulnerable and that they're going to go out, I don't want to create hugely competitive threats here, but just be aware and sensitive to what's happening in the marketplace around you. And if there are opportunities to grow new clients and diversify new clients, take advantage of that. Now, the other thing that's really important is we have heard a lot that a lot of staff have been laid off, and you saw that statistic about 33 million people being laid off. But what we've also heard is that in those layoffs, there are a number of people that have chosen to take other opportunities. Yes, there are other jobs out there. Yes, there are other people hiring. And that if you have laid off very, very valuable staff, just be sensitive that that creates a breach of trust at times with people. And if you're going to retain your most valuable staff, be very conscious about what you're doing, because they may not come back. And we've heard situations where people have been invited to come back, and what they've done is turn that down because sometimes the unemployment benefits are better, which is shocking to me, which is why we hear that the Senate talking about not extending the unemployment benefits as well as they are. It is time also to talk about who's performing and maybe who's not. If you're sensitive to issues of people that are low performers, it's great to get them on a corrective path and getting them focused on what they need to do to improve. If you're thinking about who do you bring back and who do you don't bring back, and you don't know exactly where the demand is going to be, maybe it's an opportunity to staff a little lower and think about utilizing contractors to help you through demand fluctuations, right? Use independent contractors, take the experts, and maybe you can put them on part-time retainers so you can find opportunities to keep them busy that way. But it's very easy in this day and age to get ahead because we expect everybody coming back and hire everybody back all at once, and that the business doesn't come back that quickly. The other thing we forget is the opportunity to train our staff in new opportunities, in new methods, new stone, new install methods, new practices. If your back office staff, your administrative staff is working on software and you want to replace that, and you can retrain those people, it's really important to consider where you can take an opportunity for people that may be underutilized and find ways to fully utilize them. This is a great time to invest in your staff and be conscious about what you want to do to help them along. It's also easy to focus on internal operations and forget about sales and marketing. And I have a number of clients that have come to me and said, look, our salespeople want to do Zoom meetings with clients. We're scheduling meetings with people, but they don't want to walk into people's homes. How do we train our people to use Zoom better? And there's opportunities to engage sales team on tools like Zoom. Where can you use digital contracting tools? There are many firms starting to look at DocuSign to do digital signatures on contracts. And where you can set up e-commerce capabilities, start showing off your products online, there are opportunities for that. So make sure you stay in front of your key clients, make sure your marketing is out there and your true differentiating value proposition is being delivered to your clients. Don't hesitate to train and retrain your sales staff, and do your best to think about incentives that may help things close faster, more quickly. This is not a time to back off on sales and marketing. You want to make sure that as people jump back in the marketplace, if we come back in that rapid reentry, you want to make sure people know you're there, you're servicing those clients, and you're ready to respond fast. The worst thing that can happen is people are there ready to buy, and you don't have that message in front of people. Now, if you don't have a dashboard, this is very much akin to a rolling 13-week cash flow forecast. Is start to understand what are the indicators your business is doing well. Those are things like cash flow, sales pipeline, it is close rate, it's margin forecast, it's staff utilization. What are those 3 to 5 to 7 key indicators that give you a clear picture, not only is your business going well, but where is this going to go over the next 3 to 5 months? And if you can do that in Excel dashboards, great, whatever it takes. But start thinking about how do you measure the success of the business and how do you get in front of that to make sure you don't get surprised as things change rapidly in the marketplace. Why now? When I first started doing this presentation, it was sunny out. I started doing this presentation or variations of this last November for Marcum's client base, and there was no recession in sight. And the message was, you want to fix any deficiencies in your business when things are looking good. Well, we're in the middle of the recession now. And the problem is we don't know exactly how long this is going to be. We don't know if we're going to get a double dip on this recession. And I know it seems like an odd time to be putting a lot of infrastructure things in place, but if you've got spare time, you really need to take advantage of these practices. And even if you don't have spare time, you really need to take the time and effort to connect with your clients. Make sure you have a plan. Make sure you have clear cash in hand. Because the real reason why is everything I just walked you through is really just a sound business practice. There's nothing magical about it, but we shy away from putting sound business practices in place. And what we want to do is turn the recession that's occurring on the left into the calm business practices on the right. That your team is prepared and aligned, that they know what's coming, they can respond quickly, there are great client relationships, there's cash on hand and ready for whatever might come. Business growth, business turndowns. Our objective at Marcum is to make sure all our clients can make it through the picture on the right and not just come out as they were, but can come out stronger. We think there's some simple things you can do to take advantage of that. So in summary, we would say, let's talk about making sure it's not just you as leaders, but you've engaged your entire team. Make sure that you maintain a cash position. You build strong relationships with your executive team, your clients, your supply chain, and your staff. You follow these approaches. So with that said, I think we have a few minutes left and we'll turn it open to questions. If you'd like further information, There's my contact information. Please feel free to reach out. And you can find more information on this at the marcumllp.com coronavirus website.
Dave, thank you so much. This is a really good information, and I think your 7 points are spot on. I think we have a slide on it, but I'm going to use it as a segue while we got everybody's attention. So Dave talked about a plan and talked about metrics, and we have an amazing tool that I want to encourage everybody to start putting their data in so that we can have a great report, your 2019 data into the benchmarking system. Our benchmarking report is up and ready to go, and it gives great information to help set your budgeting, set your plan, use some of those metrics. We have 150 data points that I always encourage to boil down to 5, but it's a great tool to help catalyst our group into using a tool that we can all use together. So I want to keep reiterating that. So go on our website, start putting your information. I know it's been a weird year, but now we can use that to start planning for the future and start using it to navigate. Dave, I do have one question because I have my own ideas on some liquidity metrics and where you should be, and I always suggest a certain metric. Do you have a liquidity metric that's important to the group that since cash is king right now, how much liquidity? I know going into a recession, it makes sense, but even before a recession, how much liquidity barometer should you have in your business? Do you have a metric to use?
Well, there's two that I turn clients to very quickly, and that's a quick ratio and the current ratio, which is a relationship between your cash on hand and your ability to service short-term debt along the way. And I'm gonna draw a blank on what those exact numbers were. I'm happy to give that to you and send that out to the crew later on. We have some benchmarking tools that we commonly do. We can feed a client's financial ratios and financial numbers into it and give 5 to 15 pages of performance metrics that I think your tool does very similarly, right? It's really important to get benchmarks in and see the financials. Liquidity is all about your ability to service short-term and long-term debt. And if you have any multiples around that, you need to really look at that, and it's your ability to service it. And I can get those numbers to you very quickly, John, and get those out to the participants.
That'd be great. Anybody have any questions? Quiet group today.
Well, thanks for the information. I just want to give you guys a look ahead. Next week on Friday, we're having the ambassador operational call focused on tracking continuous improvement. So our guest speaker Ed Hill will be conducting that. And then as we look at the month ahead, next month in July, we're having Dave coming back to talk to us on the 8th to talk about cash flow and budgeting. And then we're going to have another ambassador operational call focused on throughput versus dollar, as well as our stone profits and more work calls. I think Dave made mention of the fact that right now is the chance to get a competitive advantage with your in your market. So if you need any support, remember there's a Rockhead exclusive digital package which would allow you to get ahead of the game and start building on those future leads and start taking on some of those residential customers that are out there. So if you have any questions on that, please let me know. Other than that, we thank you guys for your time, and we look forward to talking to you next week on Friday. If you please have any questions, don't hesitate to call us or contact us, and we look forward to hear from you. Thank you all.
Thank you, guys, and thank you, Dave.
Thanks, John.
For your time.